Good morning, everyone. This is Black Forest coming in with another pre-market analysis video. This morning, we're going to be looking at USDCAD. Before we get to break it down in this Forex pair, we have to say that this video is for educational purposes only. This is not financial advice, okay? But we all know why you're here to find good, credible Forex content that can help improve one's ability as a trader, okay? So with that being said, let's go ahead and get started, break down this Forex pair. Now, before we get into the technical analysis of what's going on, or basically with how the candles are presenting on the chart, what we have to examine is the USD and CAD currencies. As we stated in previous videos, the USD is being is having inherited weakness for right now due to the inflation being suffered by the American economy. So no matter how good the economic news reports come out for USD until we can fix the inflation that's suffering the American economy, it's going to be pretty hard for it to gain any significant strength. Okay. And then also we have another side to that coin in which throughout this European conflict between Russia and Ukraine, anytime the market has shifted over from an unstable to a panic market, we are having USD act as a non-traditional safe haven currency. Okay. Also, the Canadian dollar, this is a little hard to kind of break down fundamentally because the Canadian economy is not doing so bad. They're suffering inflation, but the inflation is not as bad as what's going on in America. But oil also affects the strength and weakness of the Canadian dollar also. And we've been having crazy things happen with oil throughout the whole European conflict between Russia and Ukraine just due to sanctions. And now we're having the American government leading the way against banning global sales of oil from Russia. So you're gonna have to kind of watch the Canadian dollar or any pairs that has the Canadian dollar in it, because that may move a little trickyly. Okay. Then lastly, the Canadian dollar is what you call a panic currency, in which that everyone pulls its money out of the Canadian dollar once global panic happens. But that's mostly related to geopolitical events and economic policy. So with that being said, now let's look at the technical analysis. For a while, we've been just bouncing between two price points with every time we get to 1.27, we tend to go down, and every time we get to 1.26, we tend to bounce right back up. Okay, so we are trading in a state of consolidation. Ranging consolidation, we're just bouncing between two price points where every time we get up here, we explode up, and every time we get down here, we kaboom down. All right. So what's going to actually cause this to have any trajectory to go towards the long side or the short side is going to be involved with if the Canadian dollar becomes significantly stronger due to the effects of what's going to happen with oil once the ban happens, or is the USD going to become significantly weaker just due to the overall inflation that's being suffered by the American economy, and then pretty soon we're going to start having a few ripple effects of all these sanctions of how it's because the sanctions are affecting our major trading partners in Europe, which in turn is going to eventually affect us. Okay, and that's also being reflected into our stock markets. Our stock markets, our Nasdaq and S&P, are not doing very well. So we have to take that in consideration. So if the Canadian dollar becomes significantly stronger than the US dollar due to the oil ban, what we're going to have is a significant drop in price heading towards the short side. If we have a scenario in which the USD just starts becomes much more weaker than the Canadian dollar due to the inflation growing in America, then what we're going to have is a also a push towards the short side. Okay. Now, are there a possibility it can push up? Yes, that is a possibility if the CAD was to become much more weaker than the USD, not so much the USD becoming stronger than the CAD. Now, is it possible? Yes, but it's not highly probable. So the two scenarios that we're looking at is most likely going to be either continuing consolidation with it ranging between 1.27 and 1.26, or a significant drop of price once we have an increase in the Canadian strength dollar that's either affected by the banning of the Russian oil. Okay. Then also we have to watch out for the geopolitical events that can switch these currencies from acting from traditional fundamentals, from the U.S. acting as a non-traditional safe haven currency, and the Canadian dollar acting as a traditional panic currency. Okay, I hope that information was helpful for you guys. Happy trading.